It's very different from the way other companies would use social media.
Campaigns or strategies that you've tried on LinkedIn that really worked?
And now they've really stuck. People actually prefer to sort of attend webinars because they get effective.
Welcome to episode 5 of Marketing on Mars. Today we have a special guest, George Nast. He is currently the co-founder and CEO at Atlas One Digital Securities. We'll get more into that, but it's a pretty interesting startup. Before that, George Nast spent 7 years at the Standard Chartered Bank, and he also spent 12 years before that at one of the biggest consulting companies in the world, McKinsey, where he eventually became the partner there. So some pretty significant experience at large corporations, and now he's working at a startup, at his own startup. So, George, tell us a little bit about your background and what brought you all the way to Atlas One, kind of a startup that is merging the traditional finance world with the blockchain world.
Yeah. Well, it was an interesting journey. You know, as you mentioned, I actually started my sort of professional career at McKinsey. Actually, even before that, I was in banking. I did a brief stint at the Bank of Canada. But really, when I was a consultant, is when I really got into it. You know, I worked with Canadian banks, international banks, banks in Asia. And, you know, I thought financial services was great. But then I kind of noticed that actually it wasn't really sort of addressing all the needs of consumers, of companies, particularly small businesses and the like. And after I left consulting, I actually worked at a bank, and I thought, I'm going to change things. So I worked for 7 years at Standard Chartered. Great experience as well. But still, you know, there are a lot of structural issues that banks, you know, kind of face. So I eventually got tired of that and dipped my toes in the startup scene about 5 years ago, initially in Singapore, and worked with a bunch of fintechs that were really trying to solve problems that primarily traditional financial services were not dealing with, you know, providing trade finance to companies, providing a better system to invest in securities, you know, that sort of thing. And that was really the origin of it. So initially, I was not; these weren't my own companies. I was an advisor. I was an investor, and I kind of finally got the appetite to start one myself. Really focused on the investment process and the lack of access that many investors have to the good investable assets, and also just wanted to come back to Canada. That was kind of the second impetus. I'd been over 20 years outside. And so 2.5 years ago, along with a couple of co-founders, we started Atlas One.
Yeah, so I hear you're quite the avid traveler. You travel quite a bit, and you mentioned you spent a bunch of time in Asia as well during the stint of your career. Tell us, where did you stay exactly?
Well, I lived for 8 years in China, so in Shanghai, and then almost 11 years in Singapore. But I'd kind of worked all over Asia broadly, so I can't think of a country I haven't been to in Asia. My job at Standard Chartered also took me to some interesting places. Spent a lot of time in the Middle East, a lot of time in Africa. Africa is a very big market for Standard Chartered banks, so I've been to about a dozen countries or so in Africa. Covering the various markets, you know, that are there. So, it gives me both consulting and my role at banking kind of really gave me exposure to a lot of very interesting markets. That said, happy to be back in Canada, focused just on the Canadian market. So now when I travel internationally, it's more for pleasure than it is for business.
Yeah, awesome. So you spent a lot of time in various developing and also developed markets, got to understand the financial scene basically around the world. Where exactly did you first dip your toes into the blockchain space? Because you've kind of traveled around the world. Were you first introduced back in Singapore, or was it back in Canada where you met? I think you have a co-founder as well, right? So where did you first got introduced to the concept?
It was in Singapore. It was actually towards the end of my career at Standard Chartered. That's when this was kind of 2015, 2016. This is when it was really beginning to really take off. At least what they lovingly call as the first crypto boom.
Mhm.
And we looked at it as a potential alternative for payments. As many people know, the payments process at traditional banks is convoluted and expensive, and so blockchain potentially offered solutions to that. But then where I really got into it was when I left banking and started working with some fintechs that were deep in both the cryptocurrency and blockchain space. And that's where I thought, my view of it at the time, and there was this lot of craziness going on. This was 2017 in particular with kind of crypto, but I was really looking at the technology, the ability to have many stakeholders and counterparties deal with each other, but with a single common record, being the immutable ledger of the blockchain, as being something that has application beyond just the crypto space, and that was kind of the early origin of Atlas One, although at the time,
Yeah.
still a vision in
Yeah.
my eye.
Yeah. Yeah. So tell us a little bit about Atlas One. My understanding is you got the traditional stock market where companies can invest in early stage ventures, and then you got the cryptocurrency world, traditionally just all crypto and other blockchain types assets, and you're merging them together so you can invest in early stage startups, but via blockchain technologies, and that is Atlas One. That is my understanding. First of all, correct me if I'm completely wrong, but also tell us a little bit about what Atlas One
You,
does.
you got it mostly right. The one kind of nuance I would add is we don't bridge necessarily the public market, so the stock market. We actually bridge the private markets, and this is a little
Oh,
very interesting part of financial services, right? So if you roll back maybe 20 years, just about and actually the good time period for this was the dot-com boom of the late 90s, right? Just about every startup company very, very quickly went public. They listed on the stock exchange. Then there was obviously the dot-com crash. There are also a bunch of scandals like Enron. And the U.S. passed a lot of laws that actually then made it much more difficult to list your company because they wanted to make sure there weren't any frauds and that sort of thing. So what happened is the private markets kind of took up that slack. The period of time for which a startup stayed private just got longer, longer, longer. I mean, remember companies like Uber, for example, waited very, very long before they went public. There are private companies today, and think of a company called Stripe. It's not a household name, but it's a company that does most of the e-commerce payments on the internet. Just as an example, they are still private today, right? So the private markets in many ways have taken over from public markets, those that are listed, on exchanges, as being the source of venture capital for startup companies. And that's kind of the space that we operate. In Canada, that's called the exempt market.
mhm.
We always have different words for things, and it's partly driven by regulation because actually, and this is going to sound really nerdy, but where exempt comes from is that we follow what's called a prospectus exemption, i.e., we don't have to issue a prospectus. Right? If you want to list on the exchange, you got to have a prospectus. We don't issue prospectuses, and so we're
Right.
exempt, and therefore it's called the exempt market. And that's where we operate. And just like in the US, it's a huge market. Hundreds of billions of dollars of capital has been raised over the past several years in those markets. And the problem with these markets is they're much harder to access. If you want to buy a stock on an exchange, you just open up, a Wealth Simple account, or in the States, a Robinhood account, and for $5 you can start trading, right? You can't do that in the exempt market, in the private market, because first of
Yeah.
all, it's much more intransparent, and secondly, there are restrictions as to who can participate in those markets.
Right.
And so our vision was to bring that part of it closer to investors, make it easier for them to access. And we thought, so the second part of what you said, being the technology, the blockchain, and the like, is what makes it easier to do that.
Yeah. So tell us a little bit about some of the successes so far. Like, how many users you guys have? I don't know how much you guys have raised. I've heard that you guys have raised some significant amount already since the beginning. But yeah, tell us a little bit more about some of the stats.
Yeah, sure. So first of all, we haven't been in business that long. So we officially got licensed at the beginning of last year, and we kind of effectively launched our business around March or so of last
Okay.
year. But since then, we've raised over $5 million for various issuers, mainly private funds that are basically looking at expanding. So they invest in assets such as real estate and mortgages and that sort of thing. Um, we've picked up over 600 users on the platform, and we've launched about 15 offerings, that have been made, available on the platform. A little less in terms of actual numbers of companies, right? I mean, we've helped some companies really. We helped, for example, a Bitcoin miner start their kind of first initial major capital round to kind of raise capital for their operations. We've helped launch a couple of mortgage funds on behalf of a mortgage asset manager, actually here in Western Canada. So we, so far, and what's really great about those experiences is they've generated referrals, right? I mean, the best marketing, it's your client's word of mouth. It's not spending money on Google or LinkedIn or all that. It's actually your clients saying, "Hey, check out Atlas One. They've got a great product and a great proposition." And so this is where we're actually getting a lot of our business.
Yeah. That's amazing. Okay, well, now that you mentioned marketing, let's dive into marketing a little bit, because so much of a business's success, including yours, is based on marketing. So I assume on your side, really there are two sides of marketing, right? You got to get companies that are interested in using your platform to raise money, and then on the other hand, you need to have investors that are interested in investing. Am I correct in
Spot
thinking
on.
this way?
Yeah, that's exactly
Okay.
right.
So talk to me a little bit about the two sides. What does it take to market on the investor side? Let's start in
Yeah.
that side.
Yeah, it's probably a good place to start because it's the hardest, kind of part of it. As I mentioned before, on the issuer side, word of mouth, referrals, that sort of thing is actually doing a good job of kind of driving the business. But investors are hard. I mean, first of all, there are many of them. Just to throw some numbers out at you, we think that there are at least 1 million accredited investors. So these are people with sort of the wealth and the incomes to be able to buy exempt products, in Canada.
Mm,
There's about 4 million what's called eligible investors, so a little lower thresholds, still able to buy exempt products. So there's a lot of them, and I always find it funny that even though Canadians don't particularly love their financial institutions, I'm being quite polite here, okay, in saying that they also don't leave them very easily, right? And so, it really takes quite an effort to kind of bring them in and see that there is an alternative way to use your investment proceeds and to make your investments. So we've really sort of cottoned onto a few areas. One is I do have people who work with me that are called dealing reps. Some of them I pay a salary, some of them I work more on a commission basis, and they have a
okay.
responsibility to tap their network, bring in investors. The second way that is also proven very effectively is I work with the companies, the issuers. They also have networks. They also, are a big source of kind of new investors that they bring onto the platform. They have a big incentive because obviously they're also raising capital. And two, they really see that it's much easier for their own investors to sort of use us, given sort of the ease and simplicity of what we offer. And then lastly, I kind of touched on this a little bit earlier, is we do use digital marketing. We've tried everything. We've tried all of the platforms. We actually found that LinkedIn kind of works the best, which is not surprising because the audience in LinkedIn tend to be more professionals. Those are people
Right.
who have potentially money to invest. It took about a year of trial and erroring to kind of get the way we do it right. And I won't pretend that we've solved it, but
Yeah.
that's kind of the other big area.
Yeah. Well, that's the difficult part of digital marketing, uh, as a whole, right? I used to be part of the kind of financial market, and from my understanding, in terms of how the financial markets run really hasn't changed all that much, right?
No, you're
With
right.
the investment advisors and the whole setup,
Yeah.
things have kind of stayed pretty much the same over the last 15 years, 10, 15 years or so. Digital marketing, though, changes every single year or two, right? There's
Yeah.
always a new platform. Like TikTok is a brand new place
Yeah.
now. And now there's this whole trend towards, video is huge. Short form videos, 6, 12 seconds. That was very different from,
Yeah.
5 years ago where YouTube
Yeah.
was the place to go, and you had 12, 15-minute long videos. So things change so quickly. Um,
Yeah,
let's talk a little bit. Yeah.
and you're not selling a chocolate bar or a soft drink or
No.
or
Yeah.
an iPhone, right? You're not selling something that you can create a real viral kind of impact using social media. I mean, you're never going to have a viral impact about people who have to, invest their hard-earned money into a nest egg for their future. There's just no way that a TikTok ad is going to reel in somebody and invest $50,000 in an exempt offering, right? So it can only ever be, and this is the market terms, what I call top of the funnel, right? Get in some warm leads, right? That create some interest, and then have the platform, have our dealing reps, sort of bring them, in, and it's also from a regulatory standpoint, we got to make sure that they're suitable, investments for them, right? We
Right.
can't just simply, flog everything and not care of the consequences. So it's very different from the way other companies would use social media. I think for financial services, it's going to be very different, as I said, and it's really only to sort of get in sort of that initial interest.
Yeah, absolutely. So tell us a little bit about some of the campaigns or strategies that you've tried on LinkedIn that really worked.
Yeah, I mean it's less about the actual campaigns and more about the targeting,
Hmm.
because and this is where there's a real kind of tricky space between what LinkedIn can tell you about its audience without getting into privacy related issues, and then of course what you would like. I mean, I'd obviously like to target at the most granular level so that because I kind of know what the profile of our investor looks like, right? And so it was really about what our investor profile looked like, and I'll kind of summarize that. It's kind of 30 to 50 year, 30 to 55. Got to count myself in that range. Kind of range. Typically a professional who then has sort of accumulated some wealth and somewhat technical or digitally savvy, right? Because we don't have that old school approach of a broker on a phone or a lunch meeting and that sort of thing. Ours is digital. It's through a platform, right? And then we try to overlay that on the information that we can get from LinkedIn to say, okay, what's kind of the target audience and, that sort of thing. It's also things like, geographies, so we're only licensed to operate in 3 provinces in Canada. So we've got to make sure, that we don't misspend in geographies that we can't, kind of accept investors in. So it was a lot of that sort of tinkering around the audience that was, sort of a big part of it.
What are the 3 areas or the 3 regions that you're focused
BC,
on?
Alberta, and Ontario, and we just submitted our application for Saskatchewan, so we're adding a fourth province shortly. So,
right, and then just making sure that the targeting is very precise, because otherwise you're going to end up, spending a bunch of money on people that can't even sign up anyways.
Correct. Yeah,
right?
And that's and that's always there's an old saying in marketing, 50% of your marketing spend is wasted. You just don't know what 50% it is.
You just don't know which version. Yeah.
Right. So it really is about trying to shrink that down, right? And make sure that your funds are allocated in a way that sort of targets it most effectively.
So I've heard, at least a lot of the projects that I've worked on for LinkedIn, LinkedIn works really well. It's just a little bit more expensive than the other platforms.
It is
And I heard
expensive.
and I
it
heard
is expensive.
webinars work really well.
Yeah, no, we've done. It's a good point. We have done several of those, right? But again, you kind of need to make sure that you create kind of the warm leads ahead of that, so that you get sort of good attendance, on those webinars. Again, not all offerings are going to be suitable for all investors, right? So it is about selecting, or making sure that the right investors are attending those webinars, and so that you're marketing ahead of time is good for that. But that's, in effect, you can almost, the pandemic was really the driver of that, right? I mean, normally, people hosted investment seminars, they go rented a conference room at a hotel and they brought, speakers in, and investors showed up and had drinks and whatever. Well, that you couldn't do for almost 2 years, right? So, the webinars really, and now they've really stuck. People actually prefer to sort of attend webinars because they can effectively go to more of them than if they would if it was a physical event somewhere in a city, right?
Yeah, for sure. So do you think, and now that COVID seems to be more, life is kind of returning back to normal, do you think you guys will be running a lot more in-person events, like in-person
Don't
webinars, or
think
just stick with
so.
the
It
online?
doesn't suit our profile as a company, to be honest, right? This is,
Yeah.
so we will attend other conferences, and we have done that since the beginning of this year, since conferences and stuff have opened up. But for us, I think the webinar approach is better. It just suits our profile, as a company. We're a digital company. We try to make it as low touch as possible. We try to make it as self-service as possible. So webinars just kind of suit that profile for us. So we'll probably continue that as our marketing approach.
That's amazing. Well, congratulations on all the success. I haven't heard of a lot of other platforms in Canada that is attempting to get into the space. The convergence between blockchain and traditional, investment markets. It's very innovative and kind of a breakthrough kind of platform. 600 users. That's amazing. What's next for you guys? Just so I can follow along, and our listeners can follow along. Like, what are we looking forward to next, and what's the focus for marketing for you guys?
Yeah, three things. So one is we're continuing to scale the existing business, and we just launched an offering today, kind of in the real estate space. Last week, we launched a really interesting offering that allows you to earn. So it's an investment that allows you to earn income from music royalties, right? So
Mm.
it's a fund that invests in the music rights, and then they earn the income from like Spotify and from like commercials and stuff like that, and then they share the income with investors, right? So we're always on the hunt for sort of innovative offerings like that. So we're continuing to add that onto the platform. It's to sort of grow our channels. We'll probably hire some more dealing reps, use some more agents to sort of bring in more of that investment flow. So to really kind of scale up the business is the first thing. I think the second thing is we want to start to introduce secondary trading onto the platform. So right now, when you buy an investment, you basically hold it until maturity, or until there's some of the funds have redemptions in that. We want to create the ability so that people can trade. Just
Mm.
not exactly like the stock exchange, but kind of with that idea in mind. And so that'll really kind of open up, I think, the use and the interest. And that's really what blockchain is good at, right? It's good at these being able to do transactions. And so we really want to make that kind of the use case. And then lastly, in order to do that, we got to raise some money. So we're in the process of, also just raising some additional financing, for the company.
Yeah, that's amazing. Well, yeah, thanks for jumping on. And if we wanted to learn more, I believe the website is it atlas1.com?
Atlas1.ca. We've gone
.ca.
on the Canadian domain, so it's
.ca. Right, right, right. Okay.
Atlas1.ca, right?
Okay, so that's ATLASONE.ca.
Correct.
And you're also on LinkedIn as well, so anyone
Yeah,
listening can also follow you on LinkedIn.
yeah,
Well, George, thanks for jumping on. I really appreciate it, and looking forward to catching up sometime soon and hearing more about your growth.
absolutely. Appreciate it. Thank you very much for this.
Awesome, thank you.